Ladies and gentlemen, so we have diatomite, 3 kilograms at shillings 10, which gives us 30. And then, of course, we would want to scare people more. When this thing, in this case, explodes, would want the flash. So we have here flash, for example, 2 kilograms, each at shillings 5, giving us 10. So 40 in total. So in the month of April, 50 bombs, 50 atomic bombs were produced. 50 of them were produced, and raw materials are in a card. And the raw materials in a card are used. Raw materials used are full colon. We have diatomite. So diatomite, ladies and gentlemen, diatomite, we have 3 times 50, giving us 150. Diatomite, we used 140 kilograms. And each was going at shillings 12. And then we have flash, ladies and gentlemen. We used, in this case here, 100 and 5 kilograms, each at shillings 7. Each at shillings 7. So we are required now to do something very easy here. We are required, number 1, to determine material usage variance. Number 2, we are required to get material mix variance. Number 3, we are required to get material yield variance. So material usage variance. Number 2, material mix variance. Number 3, material yield variance. So material usage variance, material mix variance, and material yield variance. Haya, umeshaandika paka hapo ama hujaandika paka hapo? Umeshaandika paka hapo ama bado hujafika hapo jameni? Umefika hapo ama hujafika hapo? Jameni, umefika hapo eh? Thank you very much. So tuanza na material usage variance. So could you kindly write the material usage variance for us? Is there somebody who can write the material usage variance formula for us? Anybody who can write the material usage variance for us? Material usage variance. It's very important for everybody to measure the usage variance. Thank you very much. I can see what Gertrude has. Thank you very much. It's only Gertrude who has been able to get this. So Gertrude, when we'll be having our meeting at Isinya, right? I'll have to buy you, a good present. Good present. Thank you very much, ladies and gentlemen. You guys are bright. What in this case here, these students have told me is a very simple thing, that usage variance is a quantity variance. Usage variance is a quantity difference. Which quantities? The quantity we speculated would have used minus the actual quantity. And then, of course, variance cannot be in form of what here? Units. So after you've been able to get this variance, then at the end of the day, ladies and gentlemen, you need to come and give us what you have to monetize. Outside there, come and give us there the standard price per unit. Yeah. Tuko na raw materials mbili. Ya kwanza inajiita diatomite. So for diatomite, what do we have here for diatomite? So please remember, if I were you, I would have written this in full. This stands for standard quantity for actual production. Standard quantity for actual production. Capital SQ. Standard quantity for actual production. I love that. So ladies and gentlemen, what do we have here? When they talk of the word standard, remember variances. We measure variances from the standard and actual. So the standard is up here, the standard cost cut. So I'm able to see the information of diatomite. So information of diatomite, is there anybody who is able to see the standard quantity? Yes, it is 3 kilograms. But remember, it is standard quantity for the actual production. So we must ask ourselves at the end of the day, how many units were actually produced? how many units were actually produced. So remember, in capital SQ, just like it is in capital SH, the actual production must always be involved. The actual production must always be involved. So in the month of April, we produced 50 atomic bombs. So the actual production is 50. So it will be 3 times 50 minus the actual quantity of materials that were used. Actual quantity of materials that were used ni gani hapa sasa? Actual quantity of materials, diatomite. Actual quantities of diatomite which were used were 140. So minus 140, like that. And then come up here, ladies and gentlemen, multiply up here with the standard price. The standard price of diatomite, if you look at this very well, when they talk of standard, you look up the standard price per kilogram. It is standard price, but if I were you, I would have written this thing somewhere. It is standard price per kilogram. Standard price per kilogram. So wanasema mwalimu hii kuja hapa weka 10 namna hiyo. Wengi watachukua ile 30 pale, it's 10. So could you kindly give me the diatomite? The material usage variance ya diatomite ni ngapi? Wanasema ni 100. 100. The only thing you guys haven't done, which you have not been very fair to me, you haven't told me whether it's favorable or adverse. Most of them are telling me it's favorable because it's positive. We saved. It's favorable. Thank you very much. Now, how about flash? How about flash? Flash, ladies and gentlemen, mentioned there besides flash, this is homework that you shall never do because you shall never come back to do this paper again. It's high level, remember. It's high level, remember. So long as you measure part of the atomite, that is it. So flash, it's a homework that if you're so keen and orderly, it is your son or daughter who will use that book, will do that homework. Oh, washapata tayari, eh? Okay, so sababu wamepata sasa, wamesema mwalimu let it be classwork, no problem. So ladies and gentlemen, look at flash. For flash, I'm looking for standard quantity of flash. So flash, standard quantity is 2 kilograms. Standard quantity is 2 kilograms. So standard quantity for actual production in this case is 50. Minus the actual is down here. The actual for flash is 105. Multiply outside here with the standard price per kilogram of flash, which is 5, like that. So then somebody is telling me that mwalimu, upon subtraction and multiplication, I'm ending up getting 25 adverse. I'm ending up getting 25 adverse. So can I go to the mixed variance right now? Can I go to the mixed variance, ladies and gentlemen, right away? Can I go to the mixed variance right away? Can I go to the mixed variance right away? Thank you very much. Ladies and gentlemen, here we are. So then I would want, first of all, a good student to give me the formula of material mix variance. Material mix variance, what do we have? Could you kindly give me the material mix variance? Nasione mkunywa maji nyinyi sasa. Mtachoka. Nakumbuka ni marathon. Wadhika uko na shida ya kulala, leo utakuwa na shida mingi sana. Ni marathon. Ni marathon. Ni marathon. Ni marathon. So remember, this is all about two mixes. Two mixes, ladies and gentlemen, two mixes. It's all about two mixes. We have the standard mix. Yani, kama wale ambao mnajua mambo ya kujenga nyumba sana. Wale ambao mnajua mambo ya kujenga nyumba sana, unajua kuna ile concrete mix prescribed. 1:2:4. Hata ugali kupika, kuna ile standard mix. Inakwambia, for example, maji kiasi hii, weka ugali kiasi hii. Unga kiasi hii, ndio upate ugali mzuri. So there is that standard mix. And now there is the actual mix, which of course will be depending on the tribe you come from. Kule mwenye naamini kwamba ugali lazima ikuwe ngumu zaidi. So actual mix inaenda mbali sana na ile recommend. Na iko mwingine akipika ugali, Mungu saidia, sababu ni maji sana. But we shall overcome. So the thing here is, the material mix variance will be the difference between the standard mix and the actual mix, right? And then of course I have to come and monetize outside there, right? Standard mix. But now remember, this is standard mix of the total actual input of the total actual input. Andika namna hiyo in full. It is a standard mix of the total actual input. It is a standard mix of the total actual input. Sasa sijui kama wataona hapa chini. I wish wanaweza wakaona hiyo board yangu hapa chini. Jambo la kwanza ni ukuje hapa ututafutie the total actual input. So umesema hapa standard mix of the total actual input. Sasa kuja hapa kwa actual inputs. Please add them. Please add this to. Please add this to the total actual input. It's 245. The total actual input. The total actual input. The total actual input is 245. Thank you very much. The other thing that I would expect students to do for me is to come and give me the standard proportions. Hizi hapa you standard cost. Kuja hapa ongeza pia. Ongeza hizi mbili. 3 and 2. 3 and 2 gives me what figure, somebody there. 3 and 2 gives me what figure? 5. 5. Ah, great. So meaning, ladies and gentlemen, now I love this. 3/5, 2/5. 3/5, 2/5. Sasa hizi hazina maneno za kuzivuta hizi. Wananiambia mwalimu standard proportions. Standard proportions wameniambia diatomite ni 3/5 na flash ni 2/5. Abracadabra. Sasa angalieni hapa abracadabra. Sasa nitakuja hapa niandike diatomite. Nikuja hapa niandike flash. Nikuja hapa niandike the total actual. The total actual umesema ni 245. So remember that it is this total actual that we are flexing. It is a total actual that we are flexing. So come and apply your standard proportions. Yani hapo useme 240. Useme times 245 times 245 like that. It is the standard mix of the total actual input. So it is this total actual input that I'm flexing, that I'm apportioning afresh. The standard mix of the total. The standard mix of the total. The standard mix of the total. Itakuja ngapi? Somebody, the standard mix of the total. Itakuja ngapi oye? Itakuja ngapi oye? Akiwa niongeleshi. Ya diatomite. 3/5 times 2/45. Meraba na niambia ni 147. How about ya flash? Ya flash inakuja ngapi? Somebody 98. Thank you very much. Like that. Thank you very much. Unakuja hapo unasema minus. Are you able to see the actual mixes? Are you able to see the actual mixes? Is there anybody who is able to see the actual mixes? Is there anybody who is able to see? Yes, you can see the actual quantities here. The atomite is 140, whereas flash is 105 like that. Like a bracket namna hiyo. So ladies and gentlemen, now what we should just need to do to complete the entire thing is to come and put the standard prices per kilogram. If I were you, I would have written this somewhere. It is standard price per kilogram. So times standard price per kilogram, unasema hapa times. So are you able to see the standard price of diatomite per kilogram? Nilivuta yangu kitambo. Standard price of diatomite per kilogram. Unasema ni ngapi somebody? Mera bananiambia ni 10. Mera bananiambia ni 10. Please kazana kulipea answers kwa Zoom. Kilipea answers kwa Zoom, mambo itakuwa mzuri. 10. How about flash? Flash inakuja inakuwa ngapi, ladies and gentlemen? Wanasema ni 5. So then could you kindly go ahead? And apply your good calculators. To give me the material mix variance. So AFM waliwaletea normal table, waliwapatia normal table kweli? AFM waliwapatia normal table ama hawakuwapatia normal table? No. Mnakumbuka niliwaonya sana, nilikuwa nawaambia namna gani? Normal table, ukipata examiner mbaya kama mimi, hawezi akakupatia normal table. Lakini uzuri wanapozoka niliambia wali apply formula ya ile unasema assumed. Yeah, which is very good. An examiner from hell. Lakini Winnie, I went ahead even as your father to give you an advice. Vile ungefanya nini? Ungeafford calculator. Nikakwambia kama ni msichana, enda kinyozi, nyoa nywele kichwa kama hii yangu namna hii. Right? Tena mzuri kabisa namna hii. right? Kinyozi ni 30 bob. Pesa saloon ungefanya namna gani? Somebody ungenunua so flash unasema ni ngapi? Somebody flash minus 35. So 35 what here? Somebody adverse. So is that okay? Is that okay? Is this okay? Is this okay? Is this okay? Total is okay. So is the working okay? Ule mwana alikuwa anasema material mix ni balaha. Sasa understand kiasi. Kumbuka sitaki watu understand kabisa. Mine is helicopter, just touching helicopter. Understand kiasi your material mix variance? As long as you have the formula. Kuna alikuwa amesema ni balaha kabisa material mix variance. Sijamuona pala akisema yes. Mili yes. Thank you very much. Thank you very much. Great. Sasa inaanza kuingia. Hiyo ni material mix variance. So ikija mimi napenda material yield variance. Hakuna kitu napenda kama material yield variance. Kwa hii dunia, kwa variances zote, mimi napenda material yield variance. Material yield, thank you very much. So material yield, nikisikia material yield variance, hii mimi najua iko closely related na material usage variance, very closely. So lazima kwanza nimwandikie formula ya material usage variance. Najua material usage variance is a quantity variance, Usage variance is a quantity variance. Variance unamaanisha toanisha, subtract, variation. So unamaanisha kama ni quantity, itakuwa standard quantity minus actual quantity, and then outside here we have the standard price. Outside there we have this material usage variance. Ukishanipatia formula ya usage variance, not unless nikuwe mwenda wa simu, nitakumbuka ya yield variance. Haraka sana. Ukinipatia material usage variance, mimi nitakumbuka ya yield variance haraka sana. Nitakuja hapa, niseme ladies and gentlemen, we have the standard quantity. The better formula hapa bara ya AQ, tunatumia standard mix. Na hapa bado nabaki nini? Somebody standard price. Na bado mtapata answer kama hiyo. Naona mnatumia formula tofauti, mtapata answer exactly kama yangu. Yani tofauti ya usage variance na yield variance just lies here, lies there. Aya, sasa abracadabra. Tuanza na ya diatomite. Tuanza na ya diatomite. Tuanza na ya diatomite. Diatomite yield variance. Haya, saidia mwalimu. When we talk of standard quantity, what comes to your mind? Standard quantity. Capital SQ. What comes to your mind? It is standard quantity for actual production. And if you're able to remember the standard quantity of diatomite, the standard quantity of diatomite was 3. But remember, standard quantity has always to be multiplied with the actual production. What I know, capital SQ must always be multiplied with actual production. So it will be 3 times the actual production, which was 50, minus the standard mix, because I'm getting yield. So is there somebody who is able to remember what the standard mix of diatomite was? Is there anybody who is able to remember the standard mix of diatomite? 147, thank you very much. Minus 147 times, outside here we have the standard price per kilogram, which is 10. Outside here we have the standard price per kilogram, which is 10. Thank you very much. So please go ahead and do the same for the other one, which is called the flash. Do the same for flash. So for flash, what do we have here for flash? Is there somebody remember? I'm following this formula. Standard quantity. Standard. Hiyo ananiambia mwalimu wewe kwanza andika ifika kwanza kabla tusahau. Umeniambia mwalimu hii kwanza andika ni 30 favorable. Ya kwanza andika 30 favorable. Is that okay? Ya kwanza andika ni 30 favorable. Is the first figure correct? Is the first figure correct? Yes. So then kwa ya pili flash, I will take what times what for standard quantity. The moment I understand standard quantity, and then I understand, ladies and gentlemen, standard hours, and then I'm at home. Standard quantity is standard quantity for actual production. minus, I don't know whether you guys were able to keep the standard mix. What is the standard? 98. Thank you very much. Into, we have here times what here, somebody, times what, somebody here, times 5. Then at the end of the day, I will end up getting what figure, somebody there? At the end of the day, I'll end up getting 10, right? So is it 10 favorable or 10 adverse? 10 favorable. Thank you very much. So kiziongeza zote mbili inakuja ngapi? 40 favorable. Now, what I don't know is whether there is anybody who has been able to use their formula and gotten this 40 at the end of the day. Is there anybody who has been able to use their own formula and gotten this 40 at the end of the day? And gotten 40, your own formula, and you got that 40? Is that okay? How do you get 98? Gertrude is also giving us that nice formula there. Remember this 98, tulifanya ile apportionment. Ile tulikuwa tunachukua ile ya standard mix. Kumbuka 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 standard mix. So kumbuka standard mix, yes. Standard mix, you said is standard mix of the total actual input. Kwa hivyo itakuwa ni ile ya flash, itakuwa ni 2/5, ile fraction, times the total, 245 here. Utapata that 98 like that. Great. Now, ladies and gentlemen, from there now, what I would expect a good student always to think about for your exam, especially for purpose of the question that I would want to do of ACCA, which I'm highly suspecting, is this concept of labor. Now, remember labor cost variance in aina ngapi? Labor cost variance. Zile ambazo ni very popular labor cost variance. Zile popular tuko na labor rate variance namna hiyo, na tuko na labor efficiency variance. So is there someone who can give me the formula of labor rate variance very fast? Labor rate variance, what do we have there? 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 Labor rate variance, what do we have? Labor rate variance. It is difference between two rates. Like during Corona, tulikuwa tumeambia walimu wetu mwanzo wa Corona, mwanzo wa mwaka, tukasema these are your standard rates. When you teach for us, standard rate. Corona ilipoingia, of course, lazima tulikata mshahara kidogo, kitu cha rudi normal, minus actual rate. And then, of course, outside here, we have got what here? Actual hours. How about, ladies and gentlemen, labor efficiency variance? Anytime they talk about efficiency variance, I always remember my friend from the Indian community called Mr. Shah. These Shahs are the most efficient. If I was a lady today and I was looking for a boyfriend, a foreign boyfriend, I would think like Natasha, Pastor Natasha. Mr. Shah, somebody, they are very efficient. So anytime we say, ladies and gentlemen, about labor efficiency variance, always think about what here, Mr. Shah. And then outside monetize by putting the standard rate. Yeah. So anytime they talk about fixed overhead, efficiency variance, always think about Mr. Shah. So remember, SH, these are standard hours, right? Standard hours for actual production. AH ni actual hours. And then we have here standard rate. And then there is a brother there. Robert. Amesema at Mr. Shah marries Sarah. Aya, sio tena Natasha. Aya, awashasi nao amekuwa efficient zaidi. Aya. Aya, international what year? Disaster. International disaster. Ladies and gentlemen, here we are. Here we are. Aya. Sasa kuna tu swali moja pekee yake nataka uangalie. Swali moja nataka uangalie swali tu moja peke yake. Swali moja peke yake. Aya. Sio hiyo. Sio hiyo. No, that one. Hebu tuangalie ya Jam Air was founded in September 2007 and is one of a growing number of low-cost airlines in the country of Chania. Jam Air's strategy is to operate as a low-cost, high-efficiency airline without frills. No frills. No frills. No frills are the low-cost airlines. Hakuna mambo mengi ati yakula sijui tu nini. Ukienda huko unapatiwa soda Fanta na mkate slice mbili, lakini unalipa bei 1,500 mpaka Mombasa kama basi. And it does this by operating mostly in secondary cities to reduce landing costs, using only one type of aircraft in order to reduce maintenance and operational costs. These planes are leased rather than bought outright, having only one category of seat class. According to first class, having no pre-allocated seats or in-flight entertainment. Focusing on e-commerce with customers both booking tickets and checking in for flights online. Very important. The airline was given an on-time arrival ranking of 7th best by the country's aviation authority, who rank all 50 of the country's airlines based on the number of flights which arrive on time at their destinations. 48 Jam Air flights were canceled in 2013 compared to 35 in 2012. So you can imagine 2013, we canceled more. That one will not be very good for customers. This increase was due to an increase in the staff absentee rate at Jam Air from 3 days per staff member per year to 4.5 days. The average ground turnaround time for airlines in Chania is 15 minutes, meaning that on average, planes are on the ground for cleaning, refueling, etc. for 50 minutes before departing again. Customer satisfaction survey have shown that 85% of the customers are happy with the standard of cleanliness on Jam Air's planes. The number of passengers carried by the airline has grown from 300,000 passengers on a total of 3428 flights in 07 to 920,000 passengers on 7650 flights in 2013. The overall growth of the airline has been helped by the limited route licensing policy of Chania's government, which has given Jam Air almost monopoly status on some of its routes. However, the government is now set to change this policy with almost immediate effect, and it has become more important than ever to monitor performance effectively. So they want us to do something very easy for 6 marks to describe each of the 4 perspectives of the balance scorecard, and then B for 9 marks now. For each perspective of the balance scorecard, identify one goal together with a corresponding KPI, together with a corresponding performance measure, which could be used by Jam Air to measure the company's performance. The goals and the measures should be specifically relevant to Jam Air. For each pairs of goals and measures, explain why you have chosen them. Explain why you have chosen them. So tuanze na number one. Number one haina maneno, hiyo ni low hanging fruit. Ama hii swali unaonaje? Tuachane nayo. Hii swali unaonaje? Tuachane nayo. Tuachane na hii swali. Unaonaje hiyo swali? Tuachane nayo. Hii swali kwanza part B yake ni mzuri sana kwenu. Part B yake ni mzuri sana kwenu. Haya, tuanze na part A. This basically will also give you like 5 minutes of break. Very important. As you described this, be walking around 5 minutes. We'll come back at exactly 22:36, 22:36, and we'll more guidance. Ladies and gentlemen, here we are. So I can see so many charts here. Okay, great. Now remember, whenever it comes to balance scorecard, the very best thing that you're supposed to do is to come and look at this, the 4 perspectives. So 4 perspectives, what do we have here? We have the financial perspective. So we have the financial perspective. We have the customer perspective. We have the processes perspective. And then we have learning and innovation. Now, ladies and gentlemen, under the financial perspective, we must ensure that we are reducing our cost, we are increasing our revenues, etc. Customer perspective, we must ensure that every other time we are acquiring new customers and we are satisfying them. Like, of course, in this case here, in the question that we are doing, the goal, under customer perspective here, the goal will be to do what? To satisfy the customers. And one of the easiest ways of satisfying these customers, the KPI, will be how are you ranked? There's some ranking there. Any company that is able, ladies and gentlemen, to have good rankings automatically will be that particular airline which is able to satisfy. Now, from there, we have the processes. Processes would prefer automation. They should be automated, right? Reduction in turnaround times. For example, in this case here, the inventory turnover, right? We should be able to convert our inventories very fast. We should not be having these airplanes, ladies and gentlemen, staying on the ground for more time than the time of being up there, right? So the moment in this case here, we have these planes being down there for most of the time, then kuna shida. Learning and innovation and ensure that you are able to produce many types of products at a time, right? That is innovation. Like I always keep on telling you, EABL is very, very innovative. Hapo wakitengeneza bia kali sana, pia wengine wanatengeneza bia tamu sana. Nakwambia ni wakora, because at the end of the day, breweries has a 10-year strategic plan where they would want in the next 10 years, if you will be drinking anything, be it water, be it coffee, they would want you to be drinking EABL. The only thing that, of course, was not able to go very well with them was the Alvaro, isn't it? Haikuenda vizuri. But ni wakora sana. Wakitengeneza ingine kali namna hii, ingine tamu namna hii. Wanakuambia hapa kuna Tusker cider, hapa sijui kuna gani, like that. So, and learning also, remember, it's also about employees. You motivating employees through ensuring that they are learning. Ukianza kusikia mahali employees wanakuwa absentee, unajua straight away hapa hakuna anything to really be happy about as an employee. So, ladies and gentlemen, if you look at, just for the sake of moving very fast with our answers, if you look at the answer to this, hizi vitu ni mzuri. Mbona kama ile arioni ya 70% tunazipata sisi. Hapana, watu wakosea. Hata ile ya 413.4 sisi hapana, watu wakosea hivi vitu. Hapana. Haya. Kuja hapa, for example, amesha describe, of course part 1 was very easy for you to describe like that. Kuja hapa akasema goals and measures. So customer perspective, what is the goal? Ensure that flights land on what year? Time. Time management for you to satisfy your customers is key. Kama leo nimechelewa hapa kidogo, mmekasirika. Measure, improve on time arrival ranking of 7th best in the country's aviation authority ratings. If Jam Air can improve its own time arrival record and rise up the rankings, customers will perceive it to be more reliable and choose it over its competitors. And then we have the internal perspective. The goal is to improve the turnaround time on the ground. Measure reduction on the ground time from 50 minutes. Innovation and learning, the perspective goal is to reduce employee absentee rate. Measure reduction in the number of days absent per employee from current level to 4.5 per year. Financial perspective goal is to increase, of course, revenue there. Revenue per available, like that. And then this question number 5 was also a very good question. You can ongea kuhusu kitu ya mixed variance, etc. Very nice. Like the yield variance, very nice. Like that. Ladies and gentlemen, can I go to a different thing? Can I go to something different? 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 Rena amesema yes. Milion nauliza what about sales mix? What about sales mix? Maybe kutumia question yake. Kutumia question yake. Answer uweze kuangalia. Saizi ni about me. Saizi ni about me. What I think. Now, ukiangalia pilot paper yako, just like we did in the morning, pilot paper yako emphasize a lot about inventory stochastic model. So inventory stochastic model, you guys, how good are you? How good are you in calculations of safety stock? How good are you in calculations of safety stock? Look at your rope. How good are you in calculations of safety stock? Are we thorough in that? 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 Hapo katikati. Kama ni katikati ni sawa. Kama ni katikati ni sawa. Kama ni katikati ni sawa. Kama ni katikati uko sawa sawa kabisa. Remind us the helicopter style. Hii multiple discounts wachana naye. Wachana multiple discounts. Just the normal one. 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 Elizabeth Njeri. Na kuona kwa picha. Na kuona kwa picha. Mwalimu learning rate yangu iko almost 0. Sasa kwa nini nachoka? Paka nimekupatia break ukaenda nje. Kwa nini nachoka? Samuel, kwa nini nachoka? Why? We do a very challenging question on it. Why challenging and will be given an easy question? Remember, pilot paper basically is supposed to like mirror. I'll talk you to exact. Like I was able to use it very well. Wewe mwambie ati bye Samuel. Let's continue to 12. Haya. Helicopter bisha kuacha tayari. Hapana. Wewe ndio ukwenda break, sasa ndio kupatia break au kwenda break siji kwa nini. Now before I go to that inventory then, still mimi najua kuna kitu hapa mtaki tufanye lakini it's very important for you people. Unajua? Mimi najua kuna kitu hapa mtaki tufanye lakini ni very important for you people. Very important. Very important for you people. Hii ni hatari sana kwenu. Lakini sasa nyinyi hamtaki tuifanye. Umeona swali kama hii ya Jim Bunnies ilikuwa repeated kwa CPA word by word. You must have seen this question. Hii ya Jim. On the health club, you must have seen it. Right? You must have seen that question. Not once, not twice. Operation of variances. Yeah. Hebu angalia question number 70, just helicopter style for 9 marks. Wanakuambia Karat, a premium food manufacturer, is reviewing operations for the year of 2013. The company operates a standard marginal costing system and manufactures one product called ZP, for which the following standard revenue and cost data per unit of product is available. So we have the selling price, we have direct material A, B, we have labor, we have actual data for the 12 months, like that sales production, direct material A, direct material B, direct labor. A budgeted sales for the 3-month period were 50,000 for this. A recession in 2013 meant that the market for the ZP declined by what year? By 5%. Hii swali ukicheza unapata zero yote hii swali. So nakuuliza hapa, calculate the following variances. Ya kwanza ni sales volume variance. Ya pili ni planning and operational variances for sales volume. Alafu ya tatu sitafanya ni rahisi, price mix and yield variances. So hebu tuanza na ya kwanza sisi wenyewe wanafunzi jameni. Tafadhali please amka mahali umekaa. Please amka mahali umekaa, unatembea kidogo jameni. Hata dakika moja. Because sana kufunza vitu serious sasa unasema umechoka. Unachoka future yako. Unachoka future yako. So hebu saidia mwalimu hapo sales variance tuone. So unajua pia kuna funzo kutaka kuwasaidia hawasaidiki. Kuwasaidiki sababu hata hawako serious. Ukiambia jaribu kitu inakuwa international what it is. Hawajaribu, wanangoja tu mwalimu tu. Mimi nataka niwasaidie. Abracadabra. So is there anybody who has been able to do the question? Is there anybody who has been able to do the question fully? The first one is sales volume variance, sales volume variance, sales volume variance. Is there anybody who has been able to do the question fully? So sales volume variance hapa tuko na nini? Akiwoye sales volume variance. Thank you very much. Thank you very much. Thank you very much. I can see you guys have an, of course you haven't gotten it correctly, but you have an idea. At least you have an idea, and that ideas are what you're chasing after. So they're telling me that mwalimu, sales volume variance is very easy to get. To get sales volume variance is very easy to get. How do we get sales volume variance? To get sales volume variance, to get sales volume variance, this is what we do. It's a volume variance. So it is budgeted volume minus actual volume. And then outside here for sales volume variance, it's either we have standard profit or a standard contribution. Standard contribution is always preferable. Whenever you're looking at the two, standard contribution per unit is always preferable. So then I would first of all want you guys to give me contribution margin. So how do we get contribution margin? It's price minus variable cost. So please go to your standard cost card and give me the price of this product. Is there anybody who is able to see the price? Is there anybody who is able to see the price here? Is there anybody who is able to see the price? Wananiambia mwalimu price ni 12.4. Aha. So then which resources do we need to put down? I can see material A, the first variable cost there is material A. So material A, I should take what times what, somebody here for material A. You see material A, the material cost will be 2.5 times 1.7. 2.5 times 1.7. Then we have material B. Material B, ladies and gentlemen, material B, ladies and gentlemen, is 1.5 times 1.2. 1.5 times 1.2. And then we have labor. Labor, what do we have there? Labor, what do we have there? So for labor, we have, ladies and gentlemen, 0.45. 0.45 times 6. Yes. So could you kindly give me these figures very first? Please give me these figures very first. Please give me these figures very fast. Very first. Please give me these figures very fast. Na mkumbuke siwaachili immediately after your exams. After your exams like this, we are starting a 5 days course inaitwa Advanced Excel. Advanced Excel. I want to teach Advanced Excel at a very high level. Remember, I work for a software company. I would want to basically give you those skills for almost for free. For 2,000 shillings, I'll be able to teach you the pivot tables. I'll be able to teach you, in this case here, what we call the VLOOKUP, HLOOKUP, index and match. I'll be able to teach you the sum ifs, how to do the P&L balance sheet like that, right? For 2,000 bob from 18th to 23rd, every night, 7 p.m. to 9 p.m. So as I go back to this, is Excel an important tool for an accountant? Is Excel an important tool for an accountant? Yes, you'll be surprised. Like my current job, what gave me my current job in Excel? Because you know my employer had advertised that they wanted somebody from PwC, the Big Four. Lakini nilipoenda pale nikakamata hiyo machine, wakashangaa jamaa alijua namna gani. The fees is 2,000. The fees is 2,000 like that. Lakini tuongea kuhusu hiyo tukimaliza exam. Kwanza kujera hapa mlipatia material A ni ngapi? 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 Certificate iko, yes. I shall give you a certificate, yes. I shall give you a certificate, yes. So material A mnasema ni ngapi? Pata potea akiwa niambia hizi figure. Material A cost yake ni ngapi? 4.25. Thank you very much. How about material B? Material B inakuja ngapi? Material B 1.8. Thank you very much. How about labor? Labor inakuja ngapi mara mwisho labor? Labor inakuja ngapi woye? Labor inakuja ngapi? 2.7. 2.7, 2.7. 2.7, and then kuna mtu anataka kuja wasalimie pia dakika moja, awaambie tu jina lake saizi. So the difference here is called contribution margin. Difference inaitwa contribution margin. Contribution margin. So inakuja ngapi contribution margin? Oh yeah. Contribution margin inakuwa 3.25. Thank you very much. 3.25 like that. Sasa kujeni hapa, kumbuka hii ni standard. Don't forget we are getting it from the standard. We are getting it from the standard. If you look at this, they want us to give them the standard contribution margin. Na sisi tumetumia standard. Unaona hapa juu? Wamekwambia the company operates a standard marginal costing system where the standard revenue. So we have picked these figures to get the standard contribution margin. So abracadabra, are you able to see now the budgeted volume? How much were we budgeting to sell? Is there anybody who is able to see that? Yes, hapa chini budgeted sales for 3 months were 50,000. And the actual, in this case here, wanasema actual ilikuwa ngapi? Sales and production, actual ilikuwa ni 48,000. 48,000. So kuja hapa straight away, ladies and gentlemen. Wanasema hapa kwamba budgeted volume ni 50,000 na actual ni ngapi somebody? 48,000. Unakuja hapa unasema times standard contribution per unit that you guys have been able to get as 3.25 like that. So what figure do we have there? What figure do we have at the end of the day? What figure do we have at the end of the day? 6,500 adverse. 6,500 adverse. 6,500 adverse. Sio mngepata peke yenu hiyo. 6,500 adverse. Remember, all sales variances, we interpret them in the opposite way. Whenever you get sales variances being positive, that is very bad. It's adverse. Why? Because like now here, it's positive. I had budgeted to sell more, but I sold less. So it's adverse. Great. So I'm so sure you mngepata peke yenu without assistance at all. Alafu unajua advanced MBA nikwambie siri. Hata kama ungekosa chochote, mwanafunzi mzuri ukiona mahali kuna price na kuna tu variable cost namna hii, wewe chora tu ka table, kaite ka smart, kaite contributions table. Alafu unasema formula CM equals price minus V. Unachukua ruler una underline. Hapo unaandika price. Unaandika the variable cost one at a time, material A, material B. Namna hiyo. Unapata answer na underline. Utapita exam. Hata kama uelewa anauliza nini, tena uende uone nyingine iko na price, iko na probabilities namna hiyo. Hata kama uelewi, you just take them, multiply. AMA is not even like AFM. AMA has got so many low-hanging fruits. And the biggest, easiest low-hanging fruit ni gani? Ni theory questions za AMA. AMA kuna theory, utashangaa hata kesho. Utashangaa kesho. Watakuwa nakuuliza what is a rolling budget? What is a rolling budget? Mimi nakwambia kama sijui nitamwambia this is a budget that once in this case it gets rolling, it keeps on rolling and rolling. Yani sitakosa kitu ya kuongea. Hata kama nikutumia AMA haitaki hata mtu anajua sana. AMA inataka hata mtu mwenye ajui sana. Right? Remember, for a rolling budget, ladies and gentlemen, a rolling budget basically must be ahead of your organization 12 months every time. Every time, a rolling budget must be ahead. So tuko na January hapa, tuko na February, tuko na March, April, May, maybe paka December namna hii. Yani, wewe umekuja ukatengeneza rolling budget, for example, ya 2022. Nisikize. So unaposonga mbele, utakula hii month ya January. January kisha, what do? You roll over. And now incorporate January of 2023. Right? So my tile is rolling. January off, I bring in January of next year. February off, I bring in February of next year. So we are rolling like that. And it has got so many advantages because at the end of the day, your budget will be having updated materials. It's a tire budget. I like that. So long as you're able to picture this thing in your mind that way. How to end wrong, right? Hawa jamaa watakuja kuulize, for example, zero-based, yes, real time. Watakuja kuulize, what is zero-based budgeting and what are the key steps za zero-based budgeting? What are the key steps of zero-based budgeting? Watakuuliza kitu kama hiyo. Very easy. 34% itakuwa ni theory. So what is ZBB? Thank you very much, Mary. ZBB, remember, unlike the incremental budgeting where we look at previous year's budget to produce next year budget, under zero-based budgeting, it's like we are starting this organization afresh. So we have to start budgeting from scratch. Ask, in this case here, for suppliers to, in this case here, give fresh quotations. So everything we are doing from scratch, it's called zero base, because there is no basis of preparing them. We are starting everything from scratch. Nil base. So then what are the key steps of this ZBB? Is there somebody who is able to remember the key steps of ZBB? Is there anybody who is able to remember ZBB? We ameniambia in your accounting circles, ukipata job ya accountants, ukipatie. Yes, I normally give, like I gave this lady called, who? Is it Esther? Tulikuwa nasoma naye hapo la semester QA. I gave her a job at where I work is a multinational company. But remember that lady, I'm not the one who taught her, but she's very good in Excel. Our company is a software company. We are doing financial statements for EABL group, consolidations for EABL, Equity Bank, KCB. Most of these are listed companies. We do accounts for them. But remember, you can only come there If you're so good in Excel, if you're not good in Excel, international disaster. International disaster. Name of the organization, it's a Swedish company. It's called Arrow, A-A-R-O. You can Google it, Arrow. It's a big farm. It's a big farm. It's a big farm. Our competitors are SAP, IBM, and so forth. It's a Swedish farm. Global presence, it's in 140 countries, like that. Yeah, unaweza kumtafuta. Yes. Yes. Kumaanisha Winnie kama alikuwa anafanya na Esther, Winnie must be an employee at AAR. Right? Winnie must be an employee or must have worked at AAR. No, AAR si mbaya. I know AAR pays the accountants very well, 400,000. I know. Kwa Winnie uko sawa. But you see, we poach employees from there. We poach employees from there. We poach employees from PwC, like that. So this concept hapa ni Excel. But accountants wanalia hakuna kazi, and yet Excel ndio hawajui. Lakini tutaongea kuhusu baadaye. Thank you very much. So, ladies and gentlemen, here we are. What are we talking about? Very good. The first one is to come up with decision packages. Tell us the activities you'd want to do. Number 2, you rank those activities. So the first one, ladies and gentlemen, is the decision packages, the activities. Say, for example, as a RCM, next year, what do we want to do? We have an activity called the competence development. We have another activity, for example, of production of what year? New courses. Like now we want to start the CFFE, Certified Forensic Fraud Examiners. We want to start that course. It's a very important course. So we have that. After that, now come and rank. Those activities could be very many. You can't, of course, implement all of them. So you rank them. After you rank them, now you can go ahead and, of course, evaluate them. And then you allocate resources. We talk of evaluate and rank, right? And then, of course, you choose. And then you allocate now resources. So the best thing here is to define the activities. Define activities. Number 2, you evaluate and rank. Number 3, now straight away, allocate the resources like that. Now, thank you very much. Now, ladies and gentlemen, why is environmental management accounting important to an organization? Why is environmental management accounting important to an organization? Very good. Basically, we use this environmental management accounting to be able to be seen by other stakeholders, to be seen by the society. Like we have gone green. Going green means what here? That we will be basically pushing up our image. We go the EMA way because we would want to comply with the NEMA principles, right? We go the EMA way, environmental management accounting, for purposes of what here? Reducing our wastes. Because you remember, once we go the EMA way, we shall be emphasizing on the 3 R's. 3 R's, we have refuse, reuse, recycle, right? We go the EMA way for purposes of sustainability reporting. Remember, we have what we call sustainability reporting. If you remember sustainability reporting, under sustainability reporting, ladies and gentlemen, we are required here under sustainability reporting to report on the 3 P's. The 3 P's, we have people. We must report on the profit that we make, of course, at the end of the day, and we must give an account of the planet. So EMA comes in to really help there. And somebody, of course, is telling us that we will go this environmental management accounting way as a very good strategy for what year? For marketing, which is the same as image, like that. So when you go the EMA way, you will be able, ladies and gentlemen, when you go the EMA way, give me a minute, I bring a battery. Remember integrated reporting, as I bring my battery, integrated reporting basically, ladies and gentlemen, has the components of this sustainability reporting. Yeah. And remember right now, this sustainability reporting is a big thing in this country. Just like last week, you are aware that the Capital Markets Authority now has introduced guidelines on integrated reporting. So mwanafunzi mwanataka kuiva atokote kama sasa, fanya research mingi sana kuhusu integrated reporting, right? Fanya research mingi sana, ladies and gentlemen, for example, kuhusu nini? For example, kuhusu what we call electronic financial reporting, very important. Electronic financial reporting, very important. Ladies and gentlemen, we go back here. Now, could you kindly give me the components of an environmental management accounting system? Components of an environmental management accounting system. Environmental management accounting system. Any organization that has an environmental management accounting system, ladies and gentlemen, any organization that has an environmental management accounting system must have the following. Number one, it must have what? Let me see what my students are saying. These students will be able to pass. That there must be a policy statement that is clearly hung outside there. I like that. Policy statement. Number two, ladies and gentlemen, there must be an accounting system, environmental accounting system. There must be an environmental audit system, right? There must be public declarations, of course, especially when you are getting ISO certifications. Public declarations when you're getting ISO certifications. So you must be able to tell us, for example, last year, how many times do you go to the media to address, for example, East Africans about how nice you've been to the environment, right? So at least tumekamata hiyo kama ya policy, tumekamata kama ya accounting system, there must be an auditing system, there must be, in this case here, public what here, declarations, etc. And then of course, in this environmental management accounting, ladies and gentlemen, remember the major thing here as a management accountant really will be for you to be able to come up with a framework that will be able to measure what we call your carbon footprint, the company's carbon footprint. So the company's carbon footprint, how much as an organization are you producing in terms of carbon dioxide? So you must be able, like Bob Collymore, the late Bob Collymore was very good at this. This guy was above. I don't know why very good people die. It is us, the bad people now, all of us here. We're not dying, we're just there. Right? This guy could go to most of these TV stations, especially when they were doing their financial reporting, end of year financial reporting, and he was so articulate about environmental issues, saying that how they have been able to remove 20% of carbon dioxide from the environment. Simply because of what, and it was so articulate that M-Pesa, for example, if people were still moving around looking for finances from towns, how many vehicles would we be parading, for example, moving like that? So how do you cut carbon emissions? And these are things that I would really want to recommend to you, my students. If you would want to become a CEO, right? These are things you need to start knowing. Environmental issues. Kama sasa mimi nimeregister postgraduate, University of Nairobi, Wangari Maathai branch for environmental, right? Nitapata ka postgraduate namna hiyo, because now I'm looking at a CEO position, right? All my colleagues go nafunza nao kitambo ni ma CEO. Na sio CEO kampuni za Kenya multinational kama yetu hii. Kwa CEO kwa juu unapewa milioni kama 4-5 huko namna hiyo. Mambo inakuwa mzuri. Unajenga pension namna hiyo, tushazeeka tayari. So lazima uko unajua kitu ya carbon dioxide. Hii lazima we mention mahali kesho. And remember this carbon dioxide, ladies and gentlemen, basically we look at what we call carbon neutrality, where you look at how much am I producing, and of course, how much am I able to get from the environment, So remember, there are now organizations that have come that if you're not able to really have a scheme of removing your excess carbons from the environment, there are companies that have come which are getting into this planting of trees, making up of forest. So you'll be giving them like a monthly contribution, and then of course they'll be able to plant trees. They can even show you an area kwambia sasa wewe uko unapanda miti zako hapa. Tata hii ni RCM forest ni yako. Like that. Great. Thank you very much. So at least hiyo mambo ya ikija hii unafaa kuwa unajua. How about this internalized environmental costs and externalized environmental impacts? Have you ever heard of this? Katika environmental, internalized environmental cost vis-a-vis externalized environmental impact. Ushasikia kitu kama hiyo kweli? Difference ni gani? Internalized are internal, such cost of disposing waste. They can be quantified. I love that. Rena nasema cost incurred within an organization. For example, you may need an incinerator kama ni hospitali ya kuchoma mambo namna hii. All those costs you're incurring there internally, right? Environmental costs incurred internally. And then external, once these particular, for example, ladies and gentlemen, effluents have hit river sources, have hit rivers, there is no way you'll be able to quantify the impact. The impact could be running into billions. Like there is a time Shell in the US was able to pour a lot of oil into an ocean in the US. They have cases up to date, right? So external costs that the company has no control over. Once you have emitted the carbons up there, we've got no control. The impact is so huge, you can't quantify. So internalized to prevent and external to reduce. Yes, so internalized in this case here, we can prevent, right? We can reduce them even to almost zero because of the 3 R's: refuse, reuse, recycle. But external, the moment they go out there, ladies and gentlemen, you can only talk of minimize. You can't really, the impact is huge. Thank you very much. Now, ladies and gentlemen, there we are. And I would want us basically to look at something a little bit different. Ajamalize swali wewe tulirukaruka sana, which is very good. Now, hebu tuangalie number 2. Number 2, they want us to give them the planning and operational variances for sales volume. Nikisikia hii planning and operation mimi nafurahi sana. Sababu najua jambo moja, kwamba wakati nimetengeneza budget, things may change. I gave you a very good example of what happened to us. Tulikuwa tumefanya budget mzuri, tukisema right now, last semester, for example, as a college, having had over 1,000 students, physical classes, we got this percentage, or rather this Monday, next semester, next year, we shall be, for example, growing our numbers, say by 50%. That never happened. So basically, we had our original budget. Lakini because of Corona, we had to revise the budget. So revise the budget. And then, of course, we have the actual budget. So in this particular case, the original budget in terms of sales volume, hapa tulikuwa na 50,000 originally. Lakini sasa kitu imetokea. Ladies and gentlemen, kitu imetokea hapa. Wakatuambia, a recession in 2013 meant that the market for ZP declined by 5%. So if the market declined, it can only be wise of us to also revise our budget. We can't work with such kind of a high budget. So the revised budget here will be 95% of 50,000. You will put a figure. 95% of 50,000, that will give me what figure, somebody? 95% of 50,000, that will give me what figure, somebody? 95% of 50,000, that will give me 47,500. But at the end of the day, is there anybody who is able to remember the actual quantity? The actual quantity we sold. Is there anybody who is able to remember the actual quantity we sold? Wanasema ni 48,000. Thank you very much. Now, ladies and gentlemen, listen to me very well. Whenever you have got this type of analysis and you would want to compare the original budget, remember this is original budget and this is the revised budget. Whenever you're comparing two budgets this way, automatically you are basically getting planning. You know, budgets are planning tools. They're planning tools. And then when you compare the revised versus the actual, you are getting, ladies and gentlemen, what we call operational. These are operational tools. During operations like that. Thank you very much. So I need you to understand that original, revised budget, these are planning tools. And then we have revised versus actual. Those are what here operational. So in this case here, they want us to give them the sales volume, operational variance. Haina shida. Bado ni budgeted volume minus actual volume multiplied by sales contribution. Lakini sasa nakumbuka vizuri kwamba operation we are comparing between the revised and actual. So this has to be revised. This has to be revised. Kwa hivyo sasa itakuwa revised budget. Revised budget ni ngapi? 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 Revised budget. Revised budget 50,000 uongo. We revised it downwards. 47,500. How about the actual? How about the actual volume? The actual volume you're seeing it there. It's 48,000. It's 48,000. Alafu unakuja hapa una multiply na kale kanyamo. Kale ka sales contribution. Remember, ladies and gentlemen, hapa ni standard. Nukaambiwa na mwalimu Jobash kwamba the standard must always, whenever it's outside, the standard must always be constant. Utasema reduce kwa standard, the standard original wanasema 3.25. Kwa hivyo kama 3.25, at the end of the day, what figures do we have here? At the end of the day, what figures do we have? 47,500 minus 48,000 equals times 3. And don't forget that all sales variances are interpreted in the opposite stupid way. Unasema ni 1625. Yani ikiwa negative, unasema ni favorable. 1625 favorable. Is that okay? Is that okay? Is that okay? Somebody confirm to me. Is that okay? Yes. Thank you very much. And then now go ahead and give me the sales volume, but this time round planning. Sales volume, but this time round planning. Sales volume, but this time round planning variance. Can I rub this very first? So come and give us the sales volume, but in this case, ladies and gentlemen, sales volume, but planning variance. Sales volume, but planning variance. So, ladies and gentlemen, what do we have here? We have our original budget formula. So, formula ni kawaida. Tunasema tu budgeted volume minus actual volume. Hapo nasema multiplied by the standard contribution, sales contribution. Talk of standard contribution margin. Standard contribution margin. Lakini unakuja unakumbuka planning ni original versus reversed. So meaning that kwa bracket hapa lazima ukuwe na original versus reversed. Namna hiyo. So abracadabra, what do we have here, somebody? Abracadabra, are you able to see the original budget? 50,000 minus the revised, I don't get actual revised, inakuja 47,500. Thank you very much. Multiplied by the standard contribution per. Are you able to remember the standard contribution per unit? 3.25. Thank you very much. Like that. Thank you very much. Like that. So then at the end of the day, what are we going to get at the end of the day? What shall we be getting? Is it favorable? Why the change? Moses, japata swali yako vizuri. Ama unamaanisha tumekosea? I doubt. Hatuwezi kukosea Moses, hebu tuangalie. Question 70, to disregard Moses. Question 70. Please go say Moses. Trust you me. Yeah. Kumona ndio hapa sales volume variance 8125. 8125. Right? Yule planning. Na hiyo nyingine mlisema ni 16 ama mlipata ngapi? Ya operational, was it 1625 favorable? Thank you very much. Ladies and gentlemen, nimeona examiner wako ameongea sana kuhusu budget, hiyo mambo ya budget, lakini mimi najua sana. Come, ladies and gentlemen, tomorrow. Mimi ni mzee, nimefunza miaka mingi sana. Kama hii ndio subject nilianza kufunza kabisa tulipokuwa tunaanza ujana. Hii ndio paper ambayo tulianza nayo kabisa. So come tomorrow. Aya, imekataa. Aya. Aya. Ona swali kama hii ni swali ya dakika moja, hata si kitu ya kufanya kwangu hii. Hata ni swali ya dakika moja hii. Hii kitu ya life cycle cost, kuna mwanafunzi mwenye hizi akafanya question. Hii ya life cycle cost. Iko mwanafunzi hizi akafanya life cycle cost kweli? Is there a student who can't do this life cycle cost? Is there a student who can't do this life cycle cost? Please be very honest with me very fast. Be very honest very fast. Ama nimeuliza vibaya. You can't do. Aya. Kwani amungu kwa normal classes nyinyi? Yes, can't. Aya. Okay. Sasa wanakuambia namna hii. Fit Company specializes in the manufacture of small range of high-tech products for fitness market. They are currently considering the development of a new type of fitness monitor, which would be the first of its kind in the market. It will take 1 year to develop, with sales then commencing at the beginning of the second year. The product is expected to have a life cycle of 2 years before it is replaced with a technologically superior product. The following cost estimates have been made. So we have year 1. You can see what they have: research and development. We have like year 2, year 3. Very good. So nasema calculate the life cycle cost. So calculate the life cycle cost, ladies and gentlemen. What do we have? So the first thing that I'm supposed to do, nikisikia life cycle cost, kuna vitu ambavyo mwezi mkamisi kidogo kwa exam ya kesho. Is life cycle, target costing, na hiki tumpe letter siku hizi inaitwa throughput accounting. Umesikia kuhusu throughput accounting? Throughput. Sawa. Don't worry. Sawa. Don't worry. Haitakuja. Sawa. So ukisikia life cycle costing, ladies and gentlemen, just like any human being, there must be some research and development being done. From there, of course, we have what we call birth. You are born there. After that, ladies and gentlemen, what have you been doing? Growing. So we have the growth. After growth, ladies and gentlemen, of course, you can't grow forever. We expect to mature. So we have maturity. Mature. What next? To certain decline. And then unfortunately, there is what we call death and withdrawal from the market. Death and withdrawal from the market. Death and withdrawal from the market. So remember now what you're supposed to do. There is what we call the traditional method. Traditional method, we normally do our accounting year by year, right? We're going to sum P&L for 1 year without really looking at what does this product have for us in the future. In the future, for example, when we finish this mining, will we be required to make good the ground? If yes, then it will be very important for us to consider the death and withdrawal. So ukishaelewa hii sasa ni kitu rahisi sana. Utakuja sasa umwandikie kama kwa hiyo question, umwandikie hapo ye life cycle costing statement. Mwandikie life cycle costing statement. Life cycle costing statement. Mwandikia life cycle costing statement. Life cycle costing statement. Very easy, really. Very easy. Unaanza tuko na year 0, 1, 2, 3. Aha. Sasa unaanza na cost ya kwanza. Cost ya kwanza umekuambia ni research and development. Cost ya kwanza ni research and development. So tunaachana na hiyo 0. Tuseme R&D. R&D is incurred in year 1 over how much? 160. 160. Tutaachana na maziro mingi. Ya pili kuna design cost, kuna product design. Product design ya mbesha shiga na. Product design ya mbesha shiga na. Product design ya mbesha shiga na. Hiyo ni 800, sorry. Research and development ya 8. Yes, ni 800. Goja. Research and development ya 160. Halafu product design ya 800. Thank you very much. Kuna any other cost? Yes. There is what we call marketing cost. So marketing cost ni 3, marketing cost ni 3, marketing cost ni 3. Kuna 12 and year 1. My figures are in thousands. Kuna 1,000 year 2. Kuna 1,000 year 2. Halafu year number 3 kuna 1750. Like that. Thank you. Great. So kazi yangu ni kufuata tu. Mimi sina mambo mengi. Kazi yangu ni kufuata tu. Please look at the table that I've done. Look at the table that I've done. That's what you do. Hata hakuna kusweat. Bila jasho. 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 Aya. Motion moja. Yes. So once you write up to here, these are free marks. Once you write up to here, please tell me, yes, there is a place where you get to show us a thumbs up. Hauwezi toka bure. Kitu ya kwanza ni kwamba huwezi toka bure. Hauwezi toka bure. Kwa AMA, not unless uko na shida. Not unless uko na shida. Now, ladies and gentlemen, from there we have the next one. Are you able to see the variable manufacturing cost? Variable manufacturing cost coming in year 2 and year 3. So the variable manufacturing cost is a funny one. The variable manufacturing cost is a funny one because they have given me variable manufacturing cost per unit. They have given me variable manufacturing cost per. Whenever they give me variable manufacturing cost per unit, I must always multiply these with number of units. That is a trick. That is a trick. If you see them giving you variable cost per unit, then you must always multiply by the number of what year units given. Like now here they have told you the variable manufacturing cost per unit here is 40. You're able to see the quantity up there, it's 100,000. So what is 40 times 100,000 in thousands? Please give me the figure there. So manufacturing cost hakuna year 1, lakini iko year number 2. Manufacturing cost iko year number 2 in thousands. According to Caroline, it's supposed to be 4,000. It's supposed to be 4,000. True or false? 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 So ananiambia this one is supposed to be 4,000. Thank you very much. Yeah. So how about variable manufacturing cost for year number 3? Variable manufacturing cost for year number 3. For year number 3. They have given me the variable, they have given me the variable manufacturing cost. Variable manufacturing cost again is 42, but it's for 1 unit. So whenever they give me any cost per unit, I must always multiply this one with the number of units. I must always multiply that one with the number of units. with the number of units. So I should take something times something actually. So I'll take 42, number of units here in year 3 are 200. So somebody has been able to do this very fast. Somebody has been able to do this very fast. Na akanipatia ni 8400. Akaniambia ni 8400. And then now we have the fixed manufacturing cost. The fixed manufacturing cost. Is there somebody who is able to see the fixed manufacturing cost? Fixed manufacturing cost. Ah, yes. This one I'm going to multiply. Fixed manufacturing cost. So I will take this 120 times 100. I'm going to multiply very fast. Somebody help me out there. I'm going to multiply this very fast. I'm going to multiply this very fast. Is that okay? Should I do the multiplication? Should I do the multiplication? Mwalimu, you are very useless. We can't multiply. It is not per unit. It is not per unit. I only do the multiplications whenever these figures are given on a per unit basis. So don't multiply. Don't cheat us. We are bright. Don't cheat us. So, ladies and gentlemen, what do we have here? For fixed, inakuja 650 and 1290. 650 and 1290 here. 650 and 1290 like that. From there, now we go to the distribution cost. Distribution cost, what do we have here? So distribution cost, ladies and gentlemen, what we have here, we have the variable distribution cost. I would want someone to give me the first figures here. Variable distribution cost. So variable distribution cost, what do we have here, ladies and gentlemen? It's for year 2 and year 3. I can only see one chart item. Now there are 3 chart items, and these are bright students. One student has given me a figure of 400. Has given me a figure of 400 because they're telling me, Mwalimu, you know what? Because it is variable distribution cost per unit, then the number of units produced here must be involved. Thank you very much. So that please give me the 2 figures now. So for this one, it's 400. How about the next year, which is year number 3 for variable distribution cost? What do we have somebody? What do we have somebody there? 4.5 times 200. 4.5 times 200. Gives me what figure? Somebody. 900. Thank you very much. 900. Thank you very much. Ladies and gentlemen, after that, what else do we have? And these questions are so many in your past papers. Have you ever seen such kind of a question in your past paper? Actually, word by word. Word by word. Have you ever seen this kind of a question in your past paper? In your past paper, it's word by word. At times they only divide by 2, word by word. Yeah, like now I'm so sure 100%. Tomorrow you must get like a question out of, not that I know, but I know, like now there is this question of ABC. First of all, we finish this. November 2018 question 4. Naona kama wewe umesema tayari. Right? Kama kuna moja alirudia ya AFM alirudia hata kwa past paper na bado ni ya ACCA word by word. Word by word. So these maswali za ACCA, they are so important to me. So the next one are selling cost. So we have the variable selling cost. So we have the variable selling cost. We have the variable selling cost. So are you able to see the variable selling cost? Somebody, are you able to see? No. Kuna a fixed distribution cost. Sorry for that. Kuna fixed distribution cost. Kuna fixed distribution cost. So we have the fixed distribution. We have the fixed distribution cost. Fixed distribution cost, I'm going to pick them the way they are because if you look at the fixed distribution cost, they'll be given kilamsamo. So I'll take 120 and 120. I will take 120 and 120. Very easy. These are easy marks to get. From there, I have the last ones. I have the variable selling. Variable selling, is there somebody who has got figures for variable selling? Is there anybody who has got figures for variable selling cost? Is there anybody who has got figures for variable selling cost? Is there anybody who has got figures for variable selling cost? Please talk to me. Anybody who has got figures for variable selling cost? I can see they are given there for each unit, I can see they're given there for each unit. So is there somebody who has got, so it will be 300 vis-a-vis what here somebody? 300, it will be 300 for year 2, 300 for year 2 vis-a-vis 3.2 times 200, 3.2 times 200, which will end up giving us what figures and gentlemen? 640. Thank you very much. 640. Don't get tired. Don't get tired. So, ladies and gentlemen, the next one is the fixed selling. So come and pick the fixed selling. Unfortunately, for fixed selling, we are picking them the way they are. We are picking them the way they are. So fixed selling, what do we have for fixed selling? What do we have for fixed selling? So fixed selling, we have 180, 180. Thank you very much. 180, 180. And then we have the last one. The last one, ladies and gentlemen, is called administrative. So administrative imekamata kutoka year one. Administrative imekamata kutoka year one. So administrative, I can see 200, 900. So I can see year one, 200, 900 year two. And then lastly, we have here 1.5 million, 1,500. So could you kindly add the 3 years? Add for the 3 years, give us the total cost. Add for the 3 years, add for the 3 years very fast. 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 Add for the 3 years. So like year number 1, year number 2, year number 3, and then you give me the total of the totals. Total of the totals. Give me the total of the totals. Give me the total of the totals. Wanafunzi walichoka kabisa eh? Give me the total of the totals. Ukishafanya year 1, umefanya year 2, umefanya year 3, unaziongeza zote sasa. Uniambie kwa unapata hiyo 24, 9, 690 again. 24, 690. 24, 690. Yes. The other option, of course, ladies and gentlemen, is to come and add them, like you create a column here for total, right? Create a column there for total. So total will be taking like now here, this is 160. You come here, this is 800. And then you add like the total marketing, ujue ni ngapi, ujue variable, alafu unakuja na add hapa chini, like that. And then of course, once you get the total of the totals, then you will need to get the total quantity over the life cycle. Total quantity of the life cycle. So utapata life cycle cost per unit, utachukua that divided by what here somebody, that quantity. Now, ladies and gentlemen, here we are. I hope you've been able to get some high level helicopter concept here. I hope you've been able to get some helicopter concept there. True or false, right. Now, the other thing, ladies and gentlemen, I don't want you to go to your exam without knowing is activity-based costing. Stochastic, what I've done, total, very good. Total quantity ndio hii hapa. Total quantity ndio hii hapa. Total quantity kwa hii question ilikuwa ni 100. Total quantity units manufactured and sold in year 200 plus this 200. Total quantity is 300,000. So for stochastic, what I've done, I had done like a small video as stochastic safety stock, a small video ya stochastic safety stock ambao nitakutumia after this. Ambao nitakutumia after this. Ladies and gentlemen, from there, ladies and gentlemen, please allow mwalimu here to just ask you a question. How good are you in ABC, activity-based costing? Activity-based costing or activity-based budgeting. Uko sawa ama kuna kashida kidogo? Uko sawa ama kuna kashida kidogo? shida. Cost drivers. Do an example. Because those are some of the areas that never miss in your exams. They never miss in your exams. Because kwa hii new syllabus, hiyo is something ambayo you can rest assured utaipata kwa exam yako. Hiyo bao ametupatia cost driver. No problem. So they want us to calculate here the budgeted full cost per unit of each product using activity-based costing. Activity-based costing. Hii siwezi nikashindwa hata kwa dawa hii. Because one thing that I'm supposed to know, ladies and gentlemen, is that activity-based costing is basically used to apportion overheads to the various products that we have. Overheads are the common expenses. So like now, if you tell me to really work these out in terms of ABC, nitapata kila kitu, hata bila kujua hesabu. Kila kitu. Kwa sababu gani? Kwa sababu, oja kidogo. Kwa sababu ni kwa portion to. Sa kwa mfano, tukuje tuanze hapa na hii question straight away. I can see my overheads. So we have overheads here. We have machine setup costs, right? And then we have, ladies and gentlemen, material ordering cost. We have here machine running cost. And then we have general facility cost, right? And the following additional data related to each product. We have the batch size in units. So X1 batch has got 500. One batch has got 500, right? 500. Y 800. Z in this case here, 400. Thank you very much. So tutaziandika tu easy overheads. So unaandika hapo overheads. Hili swali unafanya kama umefunga macho. Haitaki kufungua. Ukifunga macho utaanguka. Hii huwezi ukapata kama unafungua macho. Huwezi ukapata kama unafungua macho hiyo. Hii sasa inataka namna hii tu. Now, ladies and gentlemen, we have our overheads here. So our overheads, the first one ametuambia ni gani sasa uye? The first one ambao ametuambia hapa, inajiita na zikopi tu vile ziko. Inajiita machine costs, machine setup costs. So machine setup cost. Ya pili inajiita machine ordering cost. Machine ordering cost. Ya tatu inajiita machine running cost. Machine running cost. So machine running cost. Alafu ya mwisho kabisa inajiita general facility cost. So we have here the general facility cost. And then they have given me the shillings, the dollars for their case. So the dollars, what do we have there? We have 280. We have 280 there. After 280, we have 316. After 316, we have 420. After 420, we have the next one. 420, we have 361.4. 361.4. Now, what we're going to do here is to write the cost driver besides these figures, right? And then now we're going to distribute this to the products X, Y, Z. Wamechoka. These are dollars in thousands. Yeah. Once you draw that thing up to there, tell me yes. Unasema tu Y for yes. Thank you very much. Ladies and gentlemen, tunaenda kwa kila moja at a time. So what is the cost driver of machine setup? Kama singekuwa nimeambiwa hata ningesema number of setups. Lakini hapo amekuambia cost driver. Amekwambia the cost trigger. Amekwambia the cost trigger. Cost trigger. Amesema the cost trigger ni gani? Ukienda hapa amesema cost driver is number of batches. So is there anybody who is able to see number of batches anywhere? Number of batches. Number of batches. So number of batches for, so we have here analysis of cost drivers. So analysis of cost drivers. Analysis of cost drivers. So we have X, Y, Z. We have quantity to be produced. Quantity to be produced. Tuko juu kabisa, budgeted production. Wamekuambia X ni 20,000. 20,000. Y ni 16,000 and 22,000. 16,000 and then we have 22,000 like that. Ladies and gentlemen, please come straight away and give me the batch size. So quantity per batch. But just call it batch size. Batch size. Batch size. So batch size for X is 500. 500. For Y, we have a batch size of 800, and then Z, batch size of 400. Now, ladies and gentlemen, out of this, I should be able to get the number of batches. So could you kindly give me the number of batches here? Pata potea, number of batches. Nataka unisikize pole pole. Unaona kama X. X unajua one batch. X, unajua one batch has how many units? 500. You know, meaning your batch size, 500 units. Then how many batches are we going to have? How many batches are we going to have in this 20,000? How many batches? If you cross multiply, it will be 20,000 divided by 500. So batch, number of batches you divide. Miki unajua ukiona batch size and they want number of batches, you take the quantity divided by the batch size. So ya kwanza ananiambia ni 40. So ya pili itakuwa ngapi somebody? Ya pili itakuwa ngapi somebody? 16,000 divided by 800. Itakuwa 20. Ya tatu tu, J somebody ya tatu ya mwisho. Tatu ya mwisho itakuja kuwe ngapi? 55. 55. So please kuja hapa mnipatie total. Please kuja hapa mnipatie total. 40 plus 20 plus 55. Is it 5.5 55? Please be keen. Please be keen. 55. So please nipatie total this plus this plus this. Inakuja ngapi? 115. So once I get this 115, I know these are my proportions. Itakuwa 40 over 115. Itakuwa 20 over 115. Itakuwa 55 over 115. Like that. Kwa hivyo kumaanisha hii 280 ambayo inataka number of batches. Hii inataka number of batches as the trigger, as the proration, as the proration metric. So kama ni X, itakula 280 times the X proportion. Ikiwa ni Y, itakula 280 times the Y proportion. Mera wananiambia ya kwanza inafaa kuwa 97. Ya kwanza inafaa kuwa 97 something. 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 Aki wengi waniongeleshi uoye. Aki wengi wamechoka. Wengi wamechoka. Please omba Mwenyezi Mungu atupatie 97.31. 97.31. Thank you very much. How about YE? YE, I know the figure to be apportioned is this 280 to the three products. So for YE, I will take 280 times the proportion of YE. Times the proportion of YE. Ambayo inakuja 48.70. 48.70. How about Zedo? How about Zedo? Zedo, what do we have? For 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 Zedo number 133.91. So is that okay? Is that okay really? 133.91? I mean, the question is, have we been able to pick something out of that working? You know, there are people who complicate a lot this ABC. It's not a complicated thing. It's about apportionment, really. Imeenda haraka kidogo. It's about apportionment. It's about apportionment. So long as we understand these 40, 20, 55, then add to 115. And then umeweza kupata this as your proportions. Proportion means I'll use this as my fractions. So kama ni x, I'll take 280 is to be divided to the 3. The dividing criteria is here. So kama ni x, I'll take 280 times this. I write an answer there. So, Caro, I don't know whether umetufikia. Right, understood. Thank you very much. Ebusa tuende straight away kwa machine order cost. So machine order cost, what do they want us to use to apportion machine order cost? Let's see. Hakuna kitu kama wrong cost driver. So long as inakaribia in a match. So long as in a match with whatever, we normally give it, we are very liberal when it comes to marking this thing. So long as you kitu nafanya kuna some relationship, we'll give you all the marks. So like now, tuko na material ordering cost. Mimi nilikuwa machine. So material ordering cost, wamesema the number of purchase orders. Is there anybody who is able to see number of purchase orders? Is there anybody who is able to see number of purchase orders? Hebu nipatie number of purchase orders za X tuone. Pata potea. Nipatie number of purchase orders za X. Meanza kuchoka. Number of purchase orders za X ni gani? Number of purchase orders za X ni gani? Number of purchase orders za X ni gani? Ngapi. Mwana hapa ni mjanja, anakuambia the number of purchase orders per batch. Meaning that to get the total purchase orders for X, I should take 4 times the number of purchase orders. Wana macho yote lakini hawaoni. So purchase orders. Myself, I can wrap this very well, can wrap this very fast. So now I'm looking at the total purchase orders. So I'm looking at the total purchase orders. So total purchase orders, kumbukeni, batches, hapa ilikuwa sijui ni 40, total number of batches ilikuwa 40, ya pili ilikuwa ngapi number of batches? Nakumbuka kulikuwa na 55 mahali. 20 hapa, yes. Haya. So wanakuambia purchase orders. So purchase orders per batch, hiyo wamekuambia ni 4. Purchase orders per batch, wamekuambia ni 4 per batch. Remember per batch. But I don't want per batch. I want for a whole thing. So I'll take 4 times 40. 4 times 40. 4 times 40 gives me 160. How about Y? So for Y, I will take 5 times 20. 5 times 20, which is 100. For Z, I will take, ladies and gentlemen, for Z, I will take 4 times 55. So 4 times 55, please give me an answer. Z unakuja ngapi? Please give me an answer. Please give me an answer. Z unakuja ngapi? 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 Please give me an answer. Z itakuja ngapi? Itakuja 220. Itakuja 220. Sasa hebu patia mwalimu hapa total inakuja ngapi total? Patia mwalimu total inakuja ngapi woye? Patia mwalimu total inakuja ngapi? Somebody ananiambia ni 480. 480 like that. Total inakuja 480 like that. Thank you very much. Thank you very much. So it means that the proportions are 160 over 480. This will be 100 over 480. This will be 220 over 480. So then if that is the case, could you kindly go ahead and apportion this 316? Go ahead and apportion the 316 now to one. Kwa X itakula ngapi? Kwa X itakula ngapi somebody? Please, vumilia kidogo tu. Vumilia kidogo tu, please. 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 So wananiambia kwamba itakuwa 105.33, but you see wengi hawajapata. Wengi hawajapata. 105.33. Wengi hawajapata hiyo figure. Ya pili itakuwa 316 multiplied by this figure. Multiplied by that figure. 65.83. 65.83. 65.83. How about Z? 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 144.83. 144.83. 144.83. 144.83. Yeah. Twende kwa the next one, which is machine running cost. Machine running cost. Twende kwa the next one, which is machine running cost. So machine running cost, what do they want us to use? Machine running cost, they want us to use machine hours. So could you kindly give me my total machine hours for the 3 products? So I would want someone to give me the total machine hours for the 3 products. Total machine hours for the 3 products. Is there somebody who is able to get the total machine hours for the 3 products? Total machine hours for the 3 products. Nike we. Hapa nikiangalia we, wameniambia machine hours per unit. Meaning that whenever they give me like machine hours per unit, for totality, I have to take the machine hours per unit times number of units. Hapa hawajakamata. Machine hours hawajakamata. Machine hours per unit hawajakamata your concept. Your concept hawajakamata. Machine hours per unit, your concept hawajakamata. Machine hours per unit, your concept hawajakamata. Umeona amekupatia machine hours per unit. Wakikwambia machine hours per unit, inamaanisha kwamba you must multiply with the number of units. Kwa mfano, for x wamesema it is how many hours? For x wamesema per unit. For x wamesema per unit. X per unit, wamesema x per unit ni 1.5, isn't it? So then I will take 1.5 times 20,000. 1.5 times 20,000. Because I know the number of units which will be produced for X, total number of units which will be produced. So except per batch, you multiply the number of batches. Except per unit, multiply the number of units. Multiply the number of units. So abracadabra, what do we have? Somebody abracadabra. What do we have? Please give me figures here. So machine hours for X ni ngapi somebody? Machine hours for X tuko na 30 ya YJ 30,000. Ya YJ 20,000. Y number 1 20,000. Ya ZJ. Ya Z ni 3,800. Thank you very much. 3,800. So how about the total? How about the total? How about the total? How about the total? 8,800. Total is 8,800. 8,800. So kuja hapa sema this divided by 8,800. Divided by 8,800. Divided by 8,800. Like that. Thank you very much. Now come and pick, like now this machine running cost, Yonagawa. And now, ladies and gentlemen, that marks the end of our today's what year class. So the most important thing that I will do right away, I'll be able to send to you the video of stochastic safety stocks. And then in the morning, I will be able, ladies and gentlemen, to give you, like a 3 minutes video at around 7:30, at 7:30 in the morning, a 3 minutes video, yeah, Eva. You see, Eva is one of the things that has really been captured. Yeah, Eva, very simplified. Yeah, Eva, about a watch, namna hiyo. Right. So for now, uwezi ukaona ile tumefanya sasa, but I'm so sure tomorrow you'll come back telling me, mwalimu, asante sana. Otherwise, for those of you who are finishing your CPS, I would want to take this opportunity, ladies and gentlemen, in this case here, to wish you success, of course, as you really venture into this accounting world. This accounting world is a very lucrative field, but you must hone your skills. You must be a good communicator. You must be very good in terms of writing. Never, ever aim for mediocrity in terms of accounting. If you aim for mediocrity, you'll get an employer who will be paying you, like, say, 80,000 shillings every month. And then you have got how many children? Say 4. Now you can imagine how do you apportion that using activity-based costing. And then you survive. So we must hone our skills. We must hone our skills continuously in many courses like communication, environment, writing, Excel. And I'm here to guide you guys through. Of course, you guys have my number. You have my number. Lakini wengine unapigana simu sana. Usipige simu sana kwa mwalimu. Mwalimu ako na kazi mingi. Unajua wanafunzi Wanafunzi wanaranga mwalimu hapa, wanaona kama huyu ni rika yao, which is okay, lakini usipige simu sana. Unapiga mara moja. Ukiona sijachukua, achana naye, hata watapiga namna hiyo. Right? Mgeni anafikiri amelala saizi, alikuwa my madam, ningetaka wasalimie, lakini sasa masaa imesonga. So asanteni sana. So I also take this opportunity to wish you success in your tomorrow's exam. Remember what I always keep on telling you, ladies and gentlemen, ni kwamba at the end of the day, what matters in these things ni confidence. Hata exam ikiwa ngumu namna gani, just rest assured kwamba ni ngumu kwa kila mtu, because umefunzwa with the finest in this industry. I never rate myself second. No. Not that I'm a genius, but I work so hard. In whatever that I do, I work so hard. That is when nikianza kufunza financial reporting, utashangaa sana. Sawa. So, ladies and gentlemen, it has been a pleasure hosting you around. So we shall be overcoming. Huyo mtamuona, si mnakuja Kajiado, mtamuona Kajiado, atakuwa Kajiado, mtamuona Kajiado. Tuongea kuhusu Kajiado kwanza, maliza. So asubuhi ni advanced AAA. Thank you very much. Bye-bye. See you. Bye.